Well, investors have been pouring money into cash funds at a record-breaking pace. Typically, the first week of the year does see high cash inflow, but investors pouring over $123 billion into cash funds, making it the highest ever. To break it all down, Josh Schaefer is here with the latest data that we're getting from Bank of America here this morning. Josh.
Yeah, Shauna, so that's the best first week we've ever seen, right, to go into money market funds. And then when you take a look, this is a chart from Bank of America's Michael Hartnett, and when you take a look at just cash into money market accounts, you'll see it was the biggest inflow since March 2023, which I think we can all remember why people were probably putting money in cash at that point. That was the regional banking crisis, right? And I think one of the broader takeaways here for me is when you read through a lot of 2024 outlooks, a lot of market bulls said, well, look at all the cash on the sidelines. At some point, this cash on the sidelines needs to go to work, right? And when that money goes to work, that could be good for equities, could be good for whatever area of the market they want to highlight. Well, to start the year, stocks are down and people are still piling into money market funds. So at least through 5 days, we're not quite seeing that trend play out.
Yeah, I mean, I think what I love about flows data is that it's a reminder that all of the action that we see in the market on a daily basis, like the actual change in the S&P, et cetera, it's all created on the margin because most money that goes into the stock market has already been spoken for, meaning like the majority of it is the three of us putting money into our 401k and we say you have to buy this, right? Yeah. So you got to buy the S&P 500, so you got to buy all these stocks in this proportion, you got to blah, 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 blah. And what we see with you can kind of step back and look what we saw in December, where you started to see a little steam come out of the market at the end of the year, and everyone says, well, you're just window adjusting the portfolio. You want to make sure you actually get the money in hand if you have these gains, and now you got a bunch of cash. So what do you do with the cash? Well, I don't have any good ideas yet. It's still the first week of the year. Let me put it into a money market fund because now I can actually get a little bit of something for a small amount of time by putting it somewhere, and then you start to get these gaudy numbers around, largest first week ever, biggest since 2023. On the one hand, it's a signal. Oh no, people are worried about, the market, this, that, the other. On the other, to me, Josh, it's kind of just, well, if you don't have a better idea, now you get something with your money market fund. That wasn't true for almost a decade.
Well, and that's the other sort of side to this chart we didn't bring up too, right, is bank deposits are coming down right now, right? And people are going to money market accounts just instead of having money in their bank and making less than a 1% rate when you can make closer to probably 5% right now in a money market. That's a different chart that we're not necessarily talking about today, but that is a trend in the market that was happening in 2023 and is probably going to keep happening in 2024 because after that jobs report today, I don't know if interest rates are coming down anytime soon. So it certainly, one could argue, maybe makes sense to stay in cash maybe longer than what some strategists were telling us, say, even a month ago, right? Everyone's call was, well, rates are going to come down, time to start looking to get out of cash. What if we do actually stay higher for longer and then you stay in cash?
Yep. All right, Josh Schaefer, the breakdown of where we're seeing money flow to start 2024.